Hello and welcome to this week's Market Outlook. This is Jeff Bish, president of MarketGauge.com. And if you've been following what's going on here at MarketGauge, you know that I have been filling in for Keith and Michelle. So I am pretty much like a one-legged man in a butt-kicking contest on a weekend where we've got taxes due coming up on Tuesday, President Trump's bombing Syria, and the market's at a major inflection point. So with all that in mind, I wanted to make sure that we took care of everyone, and I'm going to combine the free and the premium market outlook today. So it's going to be a little bit of a mashup, but I believe that you're all going to be happy that I did it this way. The other thing I'm kind of mashing up into this is that for Mrs. Daily, which you all have access to, another thing that I'm covering for, I gave a kind of a trading plan for tomorrow, for Monday. So rather than repeat that here, I'm going to encourage you to go to Mrs. Daily. All you have to do is go to the Market Beat section of our site and look for Mrs. Daily, and you'll see literally my plan for how I'm going to approach the markets tomorrow. Now, one of the benefits of being late in doing this is that I had to write that commentary earlier this morning, and so before any of the markets were open, and I had to paint a bunch of different scenarios. And one of those scenarios was that I thought that the market might actually open higher as opposed to lower as a result of the Syria attacks and blah, blah, blah. Looks like that might happen based on the overnight markets. That said, here's where we're going to start. The key inflection point that I'm talking about, if we look at the SPYs, is that the markets in general are trying to break out of a multi-week range. However, Friday, if you were reading Mrs. Daily, if you're not, check out Thursdays as well. Friday, we got the first major wave of earnings that came from the financials, and my emphasis there was focus on how the XLF does, because that will probably drive the market. Well, the XLF didn't do all that well. The markets were a little bit sketchy. So going into Monday, the big thing is, where are the markets going to follow through to relative to Friday's price action? And if you don't do anything else, if you were just to focus for the week forward on what is breaking the high or the low of Friday's range, you'd probably be 50% there. All right, so I give you a little bit more than that in terms of Mrs. Daily, looking at pivots in the opening range. Focus on that, but big picture, it is, where are we going to go relative to this breakout that I'm drawing on the S&Ps? And we're also going to focus in this conversation on the IWMs, which are running a little bit ahead of everybody else for the first time in a long time. Now, I'm starting here intentionally on the real motion charts in the big view area. So whether you're premium or not, you get this, right? Risk on, risk off, equities, comments. That's where I'm hanging out right now. So the thing I want to bring to your attention is that from a real motion point of view, we are definitely under pressure. Now, if you're not familiar with real motion, I'll give you a quick tutorial on it. You got the blue line and the green line in real motion down below, and that's pretty much equivalent to the 50 and the 200, or they should run in tandem, although they don't always, with the 50, the blue line, 200, green line in the price action. Now, when they don't, that's a big heads up. So as you can see, we've got in the SPYs rolling over, all right, in the Qs, rolling over, in IWMs, real motion, rolling over. Now the dots are the shorter term measure. So you want the dots to confirm the whatever the daily price action is. So for example, if the IWMs are breaking the 50, you want the dots to be breaking the 50 down here. They're not quite doing that. Pretty much nothing's doing it. So if we just look at the daily, this market is really pushing against a brick wall on the upside. However, if we look at the weekly, down below, totally different picture. And that different picture is that you can see that the momentum on a weekly basis in terms of real motion is turning up at the same time that the market is sitting right on its 50-week moving average. All right, you can see that the Q is sitting right on not the 50-week, 200-day moving average because we're looking at weekly charts, right? But IWM has now turned positive. So big trends here, and I'm sure Keith has covered this, are looking to the upside. Shorter term is a bit questionable. So that leaves us in a situation where if the markets break their February lows, you absolutely have to consider this a bear market, right? And I talk about this in the Mish's Daily, but the essence of it is simply that you should draw a line on pretty much every chart. Break that February low, below that February low, you're bearish. Back above it, you could be bullish or neutral, but below that, you're bearish. All right. So that's my premise for pretty much everything I'm going to say in the rest of this session. So let's take this to a different level. All right. Let's go to the market internals. Well, actually, before we do that, let's keep with the free area and go to more key ratios, right? So if you only free, you have this. More key ratios. This is a really important, potentially inflection point right here. And normally we would put more of an emphasis in the premium area, but because I'm mashing them together, I'm going to lead into it now. So with these ratios, as I'm sure Keith has covered, we want to look at situations where you get each one of these ratios turning up. All right, so we've got the wood versus gold already up. Now, SPY versus gold, not there yet. High yield versus TLT, got there this week, and SPY versus TLT pushing higher. If we get all these things, sorry for the mess, to turn higher in conjunction with the SPYs breaking their 50, this market could be back off to the races. Now, we're not there yet, but we're showing signs. Okay, so that's the thing I would be saying. Like if I was going to end the free video right now, I'd be saying focus on that. You get that going, and you know that that break of the 50 is what you want. If we break lower, again, I cover this in the Mish's Daily. If we break lower, then you have to be on the side of the negative momentum that we can see in that real motion daily chart, and be very careful and watch out for the break of those February lows. So oftentimes when I do webinars, people ask me, what is an inflection point? We are at an inflection point right now. An inflection point in this case, if I can, and I will, draw it as a line, is basically a line on the chart where if you go over it, the market has a good chance of accelerating higher. However, if you can't get through it, the market has a good chance of pretty much heading lower. All right, so the big lower point for us, for me anyway, is that I'm not going to turn really bearish until we break the February lows. Until then, it's just a pullback at support and noise in here. Okay, this is all noise, but we're at the top end of the noise. So if it breaks higher, you absolutely have to follow it. If it breaks lower, you have to follow it, but we're far away from the lower. All right, so in order to get a little bit more perspective in terms of who might be leading, let's take a look at the sector summary. Now, on a weekly basis, there's a couple of things that I think you need to kind of have a heads up on. One, semiconductors, right? This is a prior leader, up 4% for the week. Very weak on Friday, however. Energy. Energy right now cannot be ignored. So I'm going to talk about this a little bit later in what would normally be the premium section. So we will come back to that. So the semiconductors, however, are key. If the semiconductors can turn around their Friday, so the Friday was not good, as you can see here. If you can turn around and break above the Friday highs and move higher, then I think you need to be focused on the fact that they had a strong week, and they're still strong on the 6 month, and they're still strong year to date. They're a prior leader. That's what we want to see if the market's going to move higher. All right, so now let's jump into what would normally be the premium area. Get my charts right. That's not what I wanted. Let's go back. All right, so now in the premium area, I'm going to focus on the market internals. I'm going to focus on the gauge, and I am going to focus on the sectors. All right, not to say that all this stuff isn't important as well, but this is where I think, if I can just be concise about the analysis this week, this is where I think you need to focus. So with the market internals, I think the key chart, and granted, I'm biased because this is a big favorite of mine. It's a new high, new low ratio. If this market is going to go higher, right? If this market is going to have the potential to break out to new highs, then the new high, new ratio here has got to get stronger. Now, the first way I measure the new highs and new lows is simply by the absolute number. We need to get over 100 new highs here in the 90, and you can see when you get over 100 new highs, the 100 is the blue line here. It's a bullish scenario. It's not a guarantee, but it's a bullish scenario. If you don't have over that, any move higher, as you can see here, it started to move higher, but you really didn't get the number of new highs. It pulled back. Even in here, it tried to break. Yeah, you got a couple of days, but it was weak. You need to look for 100 new highs. Right? If you get that, it's a good sign. If you don't get it, be careful. Right? Same thing with NASDAQ. We want to see it over that 100 level. Right? Obviously, 100 is an absolute level, and I always look at relative levels. That's why we have these averages in here. But you've got to get over that 100 level as we break out over this. So my expectation, as I've already said, is that if we move lower, there's no question about trying to be bullish. You have to be cautious. If we move higher, you need to make sure that you have the support of the general market, and here's how you're going to see it by looking at these 100 new highs. All right, not magic, not difficult. That's all you got to look at. All right, now so the next thing in terms of an overall opportunity has to do with the sectors, right? And the sectors, actually, it's before I get to sectors. The sectors are really driven by the worldview. And the worldview that I want to focus on is in the gold and the oil, right? It's not so much the gold, but the oil. And Keith, I'm sure, has been focusing on this. I can tell by his charts. And if you look at USO, the oil ETF on this chart that we provide in Big B, you can see that it's a massive base that's breaking out. Down below, you can see real motion. And one of the things I didn't tell you about real motion earlier is that when you see a real motion where you've got the 50 crossing the 200 here, well before you have the 50 crossing the 200 here. Now I know this is weekly. It is a huge opportunity, not 100%, but it's telling you that the momentum on this chart is running way ahead of what this chart up here, if you're just looking at price, is anticipating. So with that, what I want to do is just dive into the opportunities from a sector point of view that are based on the energy situation right now. Okay, so if we're looking at USO now we're looking at my charts on my trade station with real motion. Now, these are the same real motion indicators you see in big view, but I'm able to show them a little bit more in detail with my individual charts. So here's a weekly situation, and you can see that real motion has already crossed, and it's crossed in a situation where we've seen USO pretty much on a weekly basis just trying to break out over this 13 level. So again, if you're reading Mish's Daily, I'm covering this kind of day by day. If you're not reading it and you're interested in this, now's the time. Just go to our website and get on Mish's Daily. So energy driven by oil right now is definitely something to watch. And so until this thing basically breaks down below 13, I would be focused on this as a potential opportunity from the long side. So let's take a look at some of the ETFs. If we were to drill down into the sectors that drove the market activity today and see what they look like. Again, I'm going to focus on the weekly basis primarily because, get this straightened out, on a weekly basis is where it's most interesting. On a daily basis, they're going to look a little bit overdone. You could look for a pullback into the 25.50 level, but if it doesn't pull back and it continues to go, then personally I'd let it go and then wait for a pullback to the 26 level. All right, but you can see OIH, it's not as obvious, but this one is looking like a significant base. But then let's take a look at XLE. All right, much closer to the cross here, much further breakout over this significant level of resistance, which should now be support around that 70 level. And if we look at XOP, I would say even clearer, closer, and from the real motion point of view, much stronger. I wouldn't chase it here, but I would keep an eye on it if it were to pull back. So basically, energy, I wouldn't chase. One exception is USO, right? And I'll cover this in Mish's Daily. Weekly chart here looks great on real motion. Daily looks like it's breaking out. Looks like maybe you've missed it. But quite frankly, I think you can be a buyer with any opening range break. It can be a buyer with any confirmation that looks like it's continuing higher, as long as you have your stop under 13. Now, why under 13? It really should stop at 13.30, but oil gets a little bit overextended at some times, and 13, I think the low of this gap higher should hold. So 50-cent a risk, or maybe even a 60-cent risk, 2 ATRs. Maybe it sounds like a lot. Not when you look at it like this. All right. Now, I could go into all kinds of fundamental explanations for why this might be happening. But the more powerful one is that from a real motion or momentum point of view, this thing crossed positive well before this crossed positive, and the breakout here, even if it just goes back up to major resistance at 20, is a major move. That's 50% move, right? So I'm not at all suggesting we're going back up to 35. That's going to be a total change in the dynamic. But energy is leading the market, and unless the market completely collapses, energy looks like it's poised to become a new market leader. Now, if it can do that along with the semis, which we talked about earlier, then we've got a really interesting market. Now, before I let you go, I'm going to take you back to Big View. And I want to focus on the gauge for a second. All right, now the gauge relates back to what I was talking about earlier in this video with the various ratios. You can see here, now again, if you're a free member, this is something new. If you're a premium member, then you've had access to this, but actually right now we haven't opened up premium memberships to anyone other than those of you who have the alpha rotation program, right? So if you're in alpha, then you've actually got a leg up because you've got the gauge plus the AI or the mechanical system of alpha rotation. But for the sake of the gauge, the interesting thing here is that if you see a month ago, it was neutral. A week ago, it was negative. Currently, and this is as of Friday's price action, it's bullish. All right. Now that was before the Syrian missile strikes. The thing with the Syrian missile strikes is that had that happened, this is what I say in Mish's Daily, had that happened during the market open, the markets could have been down 1%, 2%. I don't even want to speculate how much. But because it happened over the weekend, the markets have now had time to digest the fact that they've been able to digest the fact of what might come next. And it's not as uncertain as it would have been in real time. As I started this video, the markets are currently trading higher than where they closed on Friday. That is particularly interesting given that the market's reflection on its next move has moved from a bearish stance to a bullish stance. This is why I say in Mish's Daily that if we open higher and we break the 30-minute opening range and we're over the floor trader pivots, this could be an early sign of a big trend day up on Monday or Tuesday, depending on when it happens or how it works out. But if you are a premium member, keep an eye on this gauge. If you're a free member, keep an eye on those four ratios, kind of try and figure it out. If they all start turning bullish, then definitely take a bullish stance. Obviously, you can see from these three gauges here that the progression is towards bullish. Now, if you're an alpha rotation member, it's going to take more than just a green light in this gauge in order for us to flip a bullish trading signal. But based on the momentum or the direction of these indicators, if this thing gets pinned and more bullish and the market action continues higher, we're going to see a bullish or a buy signal in alpha rotation. So if you don't know what alpha rotation is, maybe I'll put a link under this, but you all should be getting my emails about alpha rotation. We've just opened it up this weekend. So closes on tonight. I might extend it because this video is coming out so late. But keep an eye on this. More importantly, we're at an inflection level. The market heads higher, it's the time to follow it. If the market heads lower, it is the time to respect the fact that the market could really get weak. Hope that helps. I'll see you in the next video.